guys, Jeff Bostic here from the Bostic team at Rate, and excited to bring you a job week market update. The first week of every month is considered jobs week. We get two main reports that we look at. One from ADP, which is a private payroll company. They tell us what their clients that they service, what they've created with new jobs. And then we also get the BLS, the Bureau of Labor Statistics job report on Friday. And so those are market movers, and they did move the market downward this week. And we're seeing rates now for the average 30-year fix with all the parameters that we always talk about. It's a perfect credit, 25% down, nationwide averages. That is now in the mid sixes, like 6.6, 6.68, something like that. So mid sixes is a great place to be, and we haven't been there in a while. So let's talk about how we got there. On Wednesday, ADP came out with their report. We were expecting 160,000 new jobs. It came in just below that at 149, so not a huge miss on that. But we saw a downward revision to the month prior by upwards of 50,000. So downward revision there, plus a slight miss, just showed that maybe there's a little bit of weakness in the job market from the ADP, the private payroll standpoint. Then on Thursday, we had unemployment come out, and that was slightly higher than last week. We're around 224. We're kind of in that same range that we've been for the past month and a half or so. So no major changes. And continuing claims, that went down for the first time in a couple weeks. So that's below 1.9 million. We'll continue to keep an eye on that and let you know how anything progresses there. Moving to Friday, this was the main event. It was the BLS jobs report. This is what the Fed is looking at really to see what their next move is going to be. And so they meet in 2 weeks, and so we'll talk about that coming up also. But the BLS jobs report was expecting around 220,000 jobs. It came in slightly higher than that at 227, so you'd think, oh, strong job market. But we also saw the unemployment rate creep up. That went from 4.1 to 4.2. That's not a huge jump, but it's enough to put pause on the Fed about maybe they need to take further movement or further direction with rate cuts. So there's that. There's also a second component of the BLS report that's where a lot of eyes were looking. That component's called the household survey. It's not calling the employers or the businesses on the survey to say how many jobs have you created. It's actually calling households, saying, hey, have you gained employment? Have you lost employment? Where are we at there? And so that survey showed overall a big loss. It showed negative 355,000 jobs gained by households. And so that's a big miss. And so the market's seeing that, they're seeing the unemployment tick up, and it was a very positive move on rates. We saw about a 0.5% drop, almost 0.5% drop from last week. And overall, just great news for your buyers. So next week we have inflation readings with CPI on Wednesday and PPI on Thursday. That's consumer price index and the producer price index. We don't expect a lot of downward movement there, but we will see if that gives us any direction on what the Fed's move. As of right now, there is an 80% chance that the Fed is going to cut rates again at their December 18th meeting. So we'll be here to give you all those updates. Stay tuned, and otherwise, have a great weekend.